Hi everyone, you're welcome to E Plus Academic Resource Center. Thank you for staying, thank you for subscribing. If you're new here, kindly subscribe to our channel, share this video, invite your friends, your classmates, so that they can be part of what we are doing. All right, quickly we'll go straight to today's class. Today we're looking at taxation. Taxation. Now, these are basic terminologies. These are basic terms we need to get ourselves acquainted with if we must know what taxation is all about. Because in our subsequent classes, we are going to be solving some problems around taxation. Okay? So I want you to stay to the end of the class so that we get to know what these terms really mean. Okay? All right. Now, when we talk about tax base, we are talking about the object or the item on which tax is levied. For example, we have the personal income tax. We have the personal income tax. Personal income tax or the company profits. Company profits. Okay? That's what we mean by tax base, the object or the item on which tax is levied. So the personal income tax is the object on which tax is levied, or the company profit. That is where tax is taken from. That's what we mean by tax base. There must be something on which tax is being taken from. All right, tax rate. This is the proportion. When we talk about tax rate, we're talking about the proportion, okay, on which the proportion of the tax base. Now, for instance, when we say 20% of tax, this 20%, and let's say our tax base for, let's say, for instance, personal income tax. Let's say we earn 10,000. Okay, let me use this part. 10,000 naira as our personal income. 10,000 naira. Okay, so 20% of 10,000 naira is our tax rate. Okay, 20% of 10,000 naira is our tax rate. Why this is our tax base? This 10,000 naira is our tax base. Our tax rate is 20%. Is that clear? Okay. Now, when we say tax rebate, we're simply saying the amount that is returned to taxpayer. Do you understand? The amount returned to taxpayer, maybe due to maybe overpayment or one reason or the other. Can be overpayment or any other reason. But that particular amount that is returned to taxpayer is what we call the tax rebate. Okay? Now, number 4, tax burden. Tax burden is simply the amount, the total amount, the absolute amount that is being paid to coffers of government by taxpayers. The total amount, the absolute amount being paid by this taxpayer now to coffers of government. For example, now let's use our amount here and our rate here. 20% of 10,000 is what? Let's see, 10,000. 20% of 10,000. 20% of 10,000 is 2,000 naira. So 20% of 10,000 naira is 2,000 naira. So 2,000 naira is our tax burden. Okay? 2,000 naira is our tax burden. Is that clear? All right. Now we talk about tax allowance. These are allowances that are given to taxpayer. It can be allowances on aged parents or relatives. It can be allowances on children or disabled relative or thereabouts. But these are amounts that are exempted from tax. Okay, there are allowances. It happens. There are allowances on aged parents, relative, children, disabled persons, and stuff like that. So that's that. So when we talk about tax evasion is when you use illegal means to actually dodge or avoid paying your tax. For example, when you misstate your profits or you misstate your source documents to actually give false information about your tax. It's known as what? Tax evasion. You're trying to evade your tax using illegal means. Then now when we talk about tax avoidance, it's when you use legal means with the sole purpose of minimizing the profits of the company, or using legal means to, for example, when you hire the services of a known consultant or somebody who is versatile in taxation, when you hire the services of a consultant to help you study the loopholes in the tax system, you see, to help you study the loopholes in the tax system, thereby using that as an avenue to reduce what is supposed to be presented as your profits. Do you understand it? When you hire the services of a consultant to study the loopholes in the tax system so as to minimize what you're supposed to pay as a profit, is what's known as tax avoidance. Okay? Now finally we talk about tax year. Tax year is the period which is usually a year that tax is being levied upon. That's the tax year. It's usually a year. It can be from January 1st to December 31st. It can be from March to April. It can be from February to March. But it's usually a year. So that period on which tax is calculated, on which tax is levied, is what is known as tax year. Okay? So if there's any question or where you don't understand, go straight away to the comment section, ask your questions, or if there's any other thing you want us to know, or want me to still explain concerning these terminologies, that's fine. Alright, we're going to stop here. I don't want this video to be too long. Alright, see you in the next class. Bye bye for now.